Hello everyone, welcome to another video with Professor Choi. Today we're going to be making our third video of how to set up graphs for stocks. Now this particular video, we are going to focus basically on how to set up trade graphs. And now one of the things I always explain when I'm doing these videos is trading usually doesn't work very well. The market and I want to stress this, okay? So trading doesn't work very well. The market can have a swing in the opposite direction of what you're thinking at any point in time, which basically means that during a day-to-day, the market is what we call a random walk. It looks like it has some kind of trend, but it's really difficult to consistently see that trend. It is better to instead have a sort of long-term view for most people. And the biggest reason for that, by the way, is because most people are not in their computer looking at all these graphs and all these movements all the time, and they don't understand everything. Therefore, for most people, it is better to think in terms of years in the market instead of days and weeks and how to make money right away. All right. So I have another video where I explain the way that basically works for most people on the market, and it's really again to do index buying. So you buy a particular index at different time periods, and you should definitely watch that particular video later. All right. But today we're going to set up graphs for traders. So let's say you do want to go ahead and test your luck to see if you can make a lot of money right away. Well, let me give you a couple of pointers of how people that like to trade do it. Now, before I do start this video, just as a reminder, if you like this video, make sure you like it. Click on like, give me a thumbs up, and also make sure you subscribe so that I know that there's people interested out there in watching my videos. And lastly, remember to share if you think this is useful for somebody else. All right. So anyway, let's get started today. So one of the first things that we need to explain is that not every stock is a good trade, and one of the indicators that will tell you whether something is a good trade or not is this beta. I explained beta on a different video, but let me do it again real quick since we're talking about it right now. All right. So the beta basically tells you how quickly a stock is moving compared to the index. So the beta is an indicator of how fast a particular stock is moving in a certain direction compared to an index. So if this is an index, for example, and your stock moves with the index, in other words, in the same direction, same everything, then you'll have a beta of 1. So it means that you move on 1-to-1 with the index. Now, if you have a beta of 2, for example, what that basically means is that your stock moves in the upward direction faster than the index. Okay? Now, if you have a beta of, say, 0.5, what it means is that you move in the same direction of the index, but slower. So if the index is moving in this speed, you're moving at this speed upwards. Okay? If you have a beta of 0, it means there is no correlation between your stock and the index. All right? And then we go into negative beta. So if we have a beta of, say, -1, what that basically means is if the index goes up by 1, your stock is going down by 1. And negative beta stocks can be basically used to trade opposite to the index. So if you think the index is going to go up, Or if the index is going to go down and you want to make money, then you buy the stock with the negative beta. All right. Now, if you have a negative 0.5, then what it means is if the index goes up by 1, you're going down by 0.5. Again, these are averages, all right? So it's not every day. Now, if you have a beta of negative 2, then if the index is going up by 1, then you're going down by 2. All right? So, what are stocks that are good trades? Well, good trades have to be high beta. And the reason for that is because if you want to trade, then you're looking for fast moves up and down. And then that will allow you to buy, sell, buy, sell. Okay? So stocks with low beta are not good trades normally because it will basically follow the index again in one direction or the other. High beta stocks will basically do this a lot. And that's kind of like what you want because you want to buy low, sell high. Again, if you're a trader, buy low, sell high, and so on. And you want to keep doing that to make basically a lot of money faster. As I just mentioned before, it doesn't work for most people, but if you do want to make this a thing for you, then maybe you'll be the next super rich person that can do it. All right? And there's a heck of a lot more than just graphs, by the way. A lot of luck, and you just get, very good at using see things. So let's take a look real quick at a stock of Tesla, for example, that has been moving up and down very quickly in the last few months or so. Notice it has a beta of 2 right here. All right, so we got a beta of 2. Now let's take a look at another stock that I always talk about. It's not a very good trade because it's a beta of 0.74. All right, another stock that has been kind of like up and down a lot is GME. Notice it has a beta of negative 1.82. So it moves opposite to the market by faster than the market. All right, so let's take a look at what would have been a potentially good trade with Tesla and then how to set up the graph for that. Because again, we got a high beta. All right, so, actually, before I forget that, you also want to have high volume because that allows you to get in and out with a lot of stock. All right, but anyway. So we already set up some of these graphs before, as I mentioned. So I explained what the color bars mean. So this is video number 3. So go back to 1 and 2 if you want to understand that. All right. So let's set up this graph for trading. And now there are 2 things that must be here if you really are interested in learning how to trade. And those are really strong indicators of the movement of a particular stock. The first indicator that people like to use is the MACD. Now, good news is with Yahoo Finance, again, just click on it, and there you go, you got your MACD graph down here. Okay? Now, what exactly is the MACD? So this is the article on Investopedia about the MACD, and I recommend everybody to kind of read every single little piece in here, and you can watch all of these videos on how to use it and how different people use it. So what I'm going to do basically is give you like the quick of all of that. All right? But basically, the MACD is the moving average convergence divergence indicator, and it's a trend following momentum indicator that shows a relationship between 2 moving averages of a security. It's calculated by subtracting the 26-period exponential moving average, or EMA, from the 12-period EMA. All right. Now, the result of this calculation, according to the statistician that came up with it, is basically a signal line, which tells you when is a good time to buy, a good time to sell, or if you want to move, make money in the opposite direction, then when do you sell short, for example, or buy to cover. All right. So let's take a look at that. It's down here. Now, another thing that you should always have when it comes to trading, because these are very good, very well correlated, is the 5-day moving average, or the 5-period average, which I like to put in green, and the 13-period average. So the 5 and the 13, which I like to put in red. Okay? So again, this is a Tesla stock, And what exactly are we looking when we are trying to trade? Well, first of all, we're looking at a much smaller time period, few months. So you're going to be buying and basically getting this out of your pocket whenever you feel like you're making money. Now notice that in here, it's actually, once you put those two indicators, it becomes very clear what you need to be doing with this. Okay, so let me show you. All right, so again, this right here is the 5-period indicator. This right here is the 13. So this is a 5 simple moving average, 5 SMA. This is a 13 SMA. We got our volume bars here. And right down here, we have our MACD. All right, so now once you see this 5-period indicator crossing and then extending, I want you to look at the separation between these two lines. That is a clear signal of a downward trend. All right, now you're going to see the MAC indicator telling you some of that right over here already. So when this one is below that other one, so this orange line is above and this one is below, this is a sell signal. Or in the case of you trading it, this is a short signal. All right, so it's a signal of when to enter a short position according to the MACD. Okay, now of course you would then corroborate that with the 13 and the 5. So the 5 drops below, the 5 SMA drops below the 13, and you see also the expansion here on the MACD. You see the expansion here between these two. This is an obvious status of a downward trend in the short term. Now, how long do you want to hold that trade? I don't know. How long is it going to last? I don't know. What I do know is that Tesla has a high RSI. So basically, when the market's doing this, Tesla is going to very fast if it does that, or up very fast if it's going up. Okay? So in other words, you know that whatever move is going to happen is going to happen very quickly. So you need to figure out, when to get in and out, but it has to be fast. These are not holds, okay? These are trades. All right, now, how about over here? What kind of signal are we getting, and should you do something about it? Well, as you can see now, it has changed that pattern, that clear downward pattern, and it's now kind of entering this sort of sideways pattern, which for traders, I'm not sure if it's a good thing or a bad thing. I don't trade quite a lot. But see right here, this is another crossing, which is an obvious show that the previous trend has ended. Okay? So once you get to this level, the previous trend has ended. So if you would have entered the short here, when the signal was given to you by the MACD, and confirmed by this right here, and then now you exit your short here, then you would have made money, the difference between here and about here on the downside. All right, now let's pick a different stock on the upside. Let's talk about GME, for example. So let's be very specific. In January, between January, so there was a lot of commotion on this stock between January and March 31st. So let's kind of zoom in on that particular period. As you can see here, this was a really good trading period. This right here was a fairly good trading period for anybody interested on this. Actually, let's change all the way back to December. See if we were getting a better signal from those two. No, it's basically flat. All right, so let me click this and take a look at it. All right, so what do we have? This is the Reddit trade that has been basically talked about quite a lot. So if you're watching this video, a few years from now, basically there's a lot of people on Reddit that were, let's call it pumping stocks like GME, AMC. They talked about Nokia at some point as well. There were a bunch of others. All right, but there was a lot of basically talk about all of these, and GME was basically at the cusp of all of this. All right, now let's see if a trader would have been able to take advantage of this on the upside. So notice that the stock basically didn't do much at all. That's what this is. And you would have kind of seen this coming, but over here, when you see this huge separation, that is your signal basically. So you start seeing this like separation between these two lines get wider and wider. All right, right here, that would have been a signal that this was about to happen. All right, of course, look at this wiggle right here. Jeez. All right, but somewhere around here, you could have in many ways using these simple indicators, the 13 and the 5, right around here, there was a crossing of the two. Right here is when they start all that separation, okay? And then right over here, you see huge separation between the two. Okay? And you would have been able to basically take advantage of this by jumping somewhere around here where the signal was becoming stronger. Not to mention, it was being pumped, aka people were talking about buy. Alright? Now, again, if you were in the moment to basically instead, if you were thinking about shorting it, you see the separation getting smaller here. That is one of the signs. Let's say we just use the MACD right here. So you would have shorted it somewhere around here, and you would have still made money all the way down here. Okay, notice that the MACD is now quite separated on the downside. So it would have been easier to predict again. If you would have entered here using the MACD, you would have shorted it here, and somewhere around here where this is ending, when the MACD crosses again, you would have exited your short. You probably want to exit before, by the way. As you can see here, it may have been late if you take that. But so this entry point for a short would have worked. And at some point, if you're not greedy, you would have worked for you. So somewhere around here to somewhere around here, you could have shorted this and make money. All right. Now, what about the opposite again? When we get the opposite, so instead, right here we get the crossing signal again. This is, as we mentioned, according to the MACD, this is a buy signal. Okay, so you'll get the buy signal somewhere around here. So what do? Let's say you decide to buy somewhere around here. Notice now you start seeing this big separation using the MACD. You see the big separation between the 5 and the 13. Again, this is the 5 SMA. This is the 13 SMA. Okay, simple moving average. And then you see the separation between the two. Okay, MACD would have told you buy here. So you would have basically bought on the crossing on the MACD, somewhere around here. This could be any price in here. And then notice how it would have worked, in the sense that it would have gone up. Now, when do you sell again? I'd say don't get greedy. So as soon as you see some money, I would sell. And Anywhere in there would have been a good time. You don't want to wait for that signal to happen again. As you can see, it may have been at the wrong time. Okay? But basically, this is one of the ways in which people who like to trade do this. Now, let me explain something that's extremely important, and I may mention at the beginning, but the market can go in the opposite direction completely blindly for no reason. You know, like just some news that happened today, all of a sudden, boom, everything goes out, and then the whole graph kind of breaks out. So you need to understand that graphs is history. They don't tell you anything about the future. People like to predict the future with graphs, but at the end of the day, graphs tells you about history. It doesn't tell you about the future. Okay? So using graphs to predict the future is missing one of the most important pieces of information, which is news. And this is why we don't recommend, or at least I don't recommend, trading for pretty much anyone who doesn't work in this business. It's because trading requires you to basically be on top of not only your graph, but the news, you know, and then understanding how something could be bad news or good news. Sometimes bad news is good news, sometimes good news is bad news, and so on. And sometimes neutral news can be good news or bad news, aka for the stock to go up or down. So trading, even though I just help you set up some trading, it usually does not work for most people. And therefore, I normally do not recommend it. But there you go. If you want to test your strategy, what I just show you right now is a strategy that a lot of traders are using with their graphs. All right. So anyway, this is another video with Professor Choi. Remember, if you like my videos, please hit like and also subscribe. And that tells me that I should keep making them, that there's people interested. And of course, if you think this is helpful to somebody else, maybe a friend, share it. All right. So thank you very much. This has been another video explaining graphs by Professor Choi. Have a good one.